Hi, I'm Ty from NAV. Qualifying for a small business loan can be a challenge for a business owner who isn't prepared for the questions a loan officer is going to ask. A successful business loan application today depends a lot less on the kind of relationship you have with your lender and more about what the data tells the lender about your business. Let's talk about 6 questions you should be prepared to answer and why. Number 1, how quickly do you need financing? If you're ready to get a loan now, rather than at some point of time in the future, the lender is more likely to take you and your application seriously. Number 2, what are your annual revenues and how is your cash flow? I know these are 2 questions, but they both point at the same thing. Your lender asks these questions for 2 reasons. The first reason is to determine whether or not you have the financial means to support periodic payments. The second reason is because they will use this information to determine how much they can approve in the event they offer you a loan. Loan amounts are usually based on a percentage of your annual revenues. Number 3, what industry are you in? Every lender has what they call a restricted industry list. Businesses they consider too risky from a credit perspective to work with. Fortunately, what some lenders consider too risky, other lenders want to work with. For instance, traditional lenders often consider restaurants to be a high-risk business, but there are other lenders who prefer to work with restaurants. They understand the industry better and they know how to accommodate for the risk. Number 4, what is your personal credit score? Your personal credit score will likely always be part of the loan discussion anytime you apply for a small business loan. Most lenders have thresholds that they need to see before they will even consider your loan application. For example, bankers like to see a personal credit score in the 700s, but sometimes will go lower, as low as 680 maybe. The SBA's minimum threshold is around 650, and many online lenders will go as low as 600, but there are some that will go even lower. A good personal credit score doesn't guarantee you'll get a loan, but it will give you more options to consider that a poor score won't. Number 5, this isn't really a question, but ID verification is a good thing. If your lender asks to ID verify, you should answer yes. It helps the lender validate that you are who you say you are. It's also a good idea to allow them access to your business checking account information. It'll help them better understand your business finances, and it will make the loan application process easier for you. Number 6, how much money are you looking for? There are a number of reasons why this is an important question. Some lenders have minimum loan amounts or caps associated with what they will lend. For example, some lenders prefer loan amounts of $1 million or more. Other lenders will only lend up to $500,000. And many lenders specialize in loan amounts of $25,000 or $50,000. And depending on your revenue, you may or may not be approved for what you're looking for. Because data drives modern business loan decisions, arm yourself with the data that will help you get the loan you're looking for. Basically, lenders are looking for the answers to these 3 questions. Can you repay a loan? Will you repay a loan? And will you be able to repay a loan even if something unexpected happens? If your data indicates the appropriate answers, you're more likely to qualify for the business loan you're looking for.